Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, December 4th, just right after the close. Well, Wall Street's main indexes jumped to all-time highs today as data showing the slowest jobs growth in 6 months reinforced investors' expectations for a new fiscal stimulus bill to help revive the economy from its worst downturn in decades. All 11 S&P 500 sector indexes were higher today, with value stocks such as energy and financials leading the gains. And on that note, let's go into 3 charts that could give us some insight into the week to come. First of all, we're going to look, as we always do, at the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when we captured this chart today, right after the close, the SPY closed at a brand new all-time closing high of $369.45. That's about $36.94 on the S&P 500 itself. Now, we can see that it gapped right here up to an intraday high on November 9th at 364, but on that day it fell to close lower, and closing highs are much more important than intraday highs. So that's why when we talk about new all-time highs that are very important ones, we always talk about closing highs. So anyway, it did gap up that day, fell right back down again, then started climbing a little higher here, got up a little bit higher, gap down, but in the last 2-3 weeks, it really has been, as you can see, just about walking up the red line, the 20-day moving average, walking up that line and doing a very nice job. And again, closing at our new all-time high at $369.45. We do have support here at 364. That's very nearby support. We also have support down here at about 350. We have more support here down here at these lows here at about 320, 321. And we've got, of course, we have support here potentially at the 200-day moving average, the black line, which is coming in at 315. Oh, and I neglected to mention our 50-day moving average, which really is important. Potential support here at $347.78. That's today. Of course, that would be about 34.77 on the S&P 500 itself. So now we're in what we call blue sky territory up here at 369 and change. Blue sky means there's no resistance on a chart, or on this S&P 500 chart. There's no price resistance up here. There's no places where it pulled back and started up offering price resistance. We're in blue sky territory. So the S&P 500 is on its own here. It's in uncharted territory. We can go down here if we want to get a little glimpse and look at the RSI, the 14-day RSI. Now, whenever the RSI climbs over and above the 70 line, and right now the RSI is at 68. So when it climbs over and above the 70 line, that means it is overbought. So we're very close to overbought, and usually we'll see a retracement once it gets overbought, and we can see where that happened right here. Look left with me back in August. We can see where the RSI climbed up and above its 70 line, and sure enough, down it came. We can look left again back here in June. We can see where the RSI climbed up above the 70 line, and sure enough, down it came. It means it's overbought. And this is a signal to many traders that it's time to take some profits. After all, markets don't go straight up forever. Please do remember that. So, but we're in good territory here. It's all good. We've got nothing to complain about. It will make a difference in the market, I am very sure, depending on what Congress does with or not a stimulus bill. So keep tuned to the news. Okay. Let's go on to our next chart. This is our daily chart of the QQQ, which of course represents the NASDAQ 100, a major index in the market. And of course, the NASDAQ 100 is home to all of the big momentum stocks that rule, Apple, Amazon, Alphabet, and Facebook, all those guys, Microsoft, even Intel is in there. Now the QQQ closed today again at like the SPY, at a new all-time closing high. On the QQQ, this was $305.52, brand new all-time closing high. Now it made its last all-time closing high back here on September the 2nd at $302.76. Then, as you know, it slid down here to about 260, then rallied back up to October 12th to about 298. So what we say here is it made a lower high. Can't draw a straight line, can I? Made a lower high, so whenever you see this, you go, could be a triangle forming here, and that's exactly what happened. And we talked about this on prior sessions. So the QQQ made a triangle, and then of course we could move this line up, but we talked about the fact that at some point here it was going to break out, and if I drew this line, well, okay. If I drew it up here, I told you all that a triangle works best when it breaks out before it actually forms about 2/3 of a triangle, and we waited and waited and waited. Finally, the Qs did break out of that triangle. This is a positive, that's bullish. So it broke to the upside toward the middle of November here, and of course has been just kind of tiptoeing up ever since. And again, our new all-time high today. Check out the RSI with me down here. We can see that with the Qs, it is at 68, similar to the SPY. So it's very close to the 70 line. Look back here with me. Look left to August or the beginning of September, and we can see that it's kind of like magic here. Every time the RSI, 14-day RSI, moves above the 70 line, we get a kaboom. Now, it doesn't happen on the exact day or hour usually, but you can kind of expect it. So, and you can see here that we did get a retracement, a pretty decent one, the last time that happened. Back here, the RSI just peaked above the 70 line, and of course we got just a few day, not bad at all, a few day pullback, but no is possible. Now, we do know that markets can stay overbought. We do know the RSI can dangle around 68, 69 for a very long time. And markets can stay overbought for a very long time. But just something to watch. If you can get this on your chart, keep an eye on the 14-day RSI. So again, we're in blue sky territory here with the QQQ. So we will stay tuned and keep our stops in and trade wisely and see what happens next. And now let's go on to our third chart. Today we're going to look at a chart I've been watching pretty closely over the last few weeks, the Sector Spider Energy ETF, symbol XLE. The XLE has 26 holdings, and as you can imagine, the Energy Spider has in it companies that participate in the oil and natural gas arena and other energy arenas. Again, there's 26 holdings. Top holdings include Exxon, Chevron, ConocoPhillips, Kinder Morgan, Phillips 66, and they're all doing real well. Now, when I captured this chart today, the XLE closed at $40.55 up here. Just out of curiosity, I like to look for you, and you know I've been doing this. I like to take these ETFs and go back and find all-time closing highs. Where did they used to be when they were at all-time closing highs? And the XLE was actually made its last all-time closing high at June 2014 at $98.57. So that's where it's been. Now, of course, this chart doesn't show that because it was back in 2014, June 2014. You're welcome to go back and look at a longer-term chart and find that. As we all know, the price of oil has dropped dramatically in the last few years. And but now it looks like maybe there's a little hope for the oil. And of course, a lot of these big oil companies are certainly into alternative energy as well. They're not just doing simply oil. They're doing a lot of things. So these companies they know how to stay alive here. We can see that on our chart this year, we can see where the March low came in. The XLE sunk down to about 23. Then it rallied up here, walked up its 20-day moving average and moved up to this June high to 46. Oil likes to rally in June, as you can hear here. Then it sunk, flipped back down again, fell back down, below the 50-day moving average, but then it stopped cold here and made a higher low at 26. Now, you know I'm not going to be able to draw. Well, it's not bad. That's straight line. Whenever you see a higher low, though, on any stock or ETF, I always get a little bit, depending on how the chart looks, I get positive because it says that buyers didn't wait for the XLE to come all the way back down to 23 and retrace back down to this prior low. Buyers started buying higher here, certainly keeping it above 26. So it's rallied since then. It's moved up above the 20-day moving average. So what I'm going to do here, if the XLE can remain above, and right here you see we've got the 200-day moving average, the black line, the 200-day simple moving average is coming down, and the XLE is just broken above that. That's positive. Now, underneath that 200-day moving average is the 20-day moving average. That's the red line. So that the 20-day is faster, obviously, than the 50 and the 200. So obviously, it's moving up more quickly with the XLE. And down here, now starting to move higher, which is positive, is the 50-day moving average. So they're kind of all out of sorts here, but they're going to get straightened out pretty soon if the XLE can move higher. It had a pretty decent volume today, trading over 51 million shares. So what I'm going to do here, I don't want to buy it at too high a price, but I also don't want to lose the trade if it's going to work. It closed at $40.55. If it can get up above this prior high, which is at 40.50 as well, and say trade up to 41.50, so $1 from here. If it can do that in the coming week, I will probably add a small share size to my portfolio. And I'm going to put my initial stop down here at 35.20, and that's below the 20-day moving average. You can see where it's climbed up above the 200-day. So it's right down here. I'm going to start my stop at 35.20. And you're going to say, whoa, Toni, that's a big stop. That's over 10% stop. And I get that. I know it. That's why my strategy is to buy small share size. Then when and if the XLE looks more positive, if it pulls back a little bit here, I can add on the pullback. If it doesn't, and it will at some point, but I've got small share size here. If it keeps going, I will raise my stop into a trailing stop. In this case, for openers, if you're a short-term, reasonably short-term trader, you could place a stop below the 20-day moving average, something like that. That would be a good trailing stop at this point. Then if it continues to move higher and the 50-day starts catching up, you can move your stop to below the 50-day. It's whatever you think is the best thing to do for your trading strategies. But for right now, 41.50, if it can get over this prior high here, I'll add small share size to my portfolio. I will then start my stop again at $35.20, and if it keeps on going, I'll ramp up my stop to a trailing stop. So if you like, you may want to keep an eye on the XLE during the coming week. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is a great time before the new year to check out my trader training programs. You will love my powerful strategies devoted to swing trading, trend trading, bottom fishing, and more. My programs are easy to understand, and they can help you increase your gains quickly and easily. To see all of my online trading programs, simply go to the link on this screen or click on the orange button below. And now, let's go on to final thoughts. Here's our question for this week. When I trade, do I think of myself as an imposter? Do I think of myself as an imposter? And you think, oh, but a lot of people do it. At one time or another in most of our lives, we have achieved success in an area and thought of ourselves as an imposter. I have seen traders make big wins and within days or months give it all back. Why? Many times these traders are victims of imposter thinking, and I had it myself when I was a new trader. Imposter thinking tells that if we make a big profit in the market, we were just lucky. We will never be able to repeat that. And underneath it all, we may think we're a fake, a fraud, and we don't really know what we're doing. Now, if this mindset sounds familiar to you, it could cause you to sabotage future gains and even cause you to give them back. And trust me on this, this is true. This kind of thinking is imposter thinking. If we maintain imposter thinking by believing that any profitable trades we make are simply luck, and we don't really deserve to make money by trading, then we are victims of our own thinking. Now, the good news is that you can change this pattern of thinking. First, please take a minute. Become aware of your thought patterns during the trading day. The next time you make a profit, listen to what you think as you log in your gains. Yeah, initially you're going to feel great, but then do your thoughts turn to, well, that was pure luck. Man, I don't know how that happened. That couldn't have been me. I don't know how to do this stuff. Have you done that, or have you thought, are there thoughts about, well, I was just lucky. I was just lucky. I mean, sure, a little bit of luck comes into it at times, but if you continually think this way, it's not a good thing. So if you are thinking that way, jump off that thinking track and step onto a new one. Begin now taking credit for small triumphs. Take 2 to 3 small gains in a row. I don't care if your gain is $15. Take 2 or 3 in a row and pat yourself on the back. When you make a trading profit, stay aware of any negative thinking patterns and switch them to positive ones. Getting rid of imposter thinking is a very worthy project that is worth the time and effort we invest into it. So let's replace any imposter thinking with, I am a calm, confident, successful trader. That way, you can make more profits and you can keep them. Finally, if you'd like to become a more successful trader, do check out my trader training programs. My simple yet powerful strategies will help you increase your gains quickly and easily. To see all of my online trading programs, simply go to the link on this screen or click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.